The world is rapidly moving toward digital currencies, but the United States is taking a different path. Federal Reserve Chair Jerome Powell just made a bold statement. There will be no digital dollar while he's in charge. But why? What does this mean for the future of digital currency in the US? Let's dive in. On February 11, 2025, during a Senate Banking Committee hearing, Jerome Powell made a rare and clear-cut statement. The Federal Reserve will not issue a central bank digital currency, CBDC, while he remains the Fed chair. This is a big deal because, until now, the Fed has been vague about the possibility of a digital dollar. Back in 2024, Powell said the US was nowhere near adopting a CBDC, but he never outright ruled it out, until now. This announcement has sent ripples across the financial world, as many countries, including China and the European Union, are already rolling out their own digital currencies. So, what's the problem with a digital dollar? Well, here are the key concerns. 1. Privacy and government control. Critics argue that a US digital currency could give the government unprecedented power to track and control financial transactions. Unlike cash, CBDCs leave a digital footprint, raising concerns about surveillance and financial freedom. 2. Financial stability risks. A CBDC could disrupt the traditional banking system. If people move their money out of private banks and into Fed-issued digital wallets, banks might struggle to stay afloat. This could lead to economic instability. 3. Cybersecurity and digital risks. A fully digital currency would be vulnerable to cyber attacks, technical failures, and potential misuse by bad actors. Ensuring security on a national scale is a major challenge. 4. Political resistance. The Republican-controlled government has made stopping a digital dollar a priority. In January 2025, President Trump issued an executive order banning the creation of a US CBDC. Meanwhile, a bill opposing CBDCs passed the House of Representatives, though its future in the Senate remains uncertain. So, what does this decision mean for the future of money in the US? 1. The US dollar remains king. For now, the physical US dollar and traditional digital payments like credit cards and bank transfers remain dominant. The Fed isn't rushing to compete with Bitcoin or China's digital yuan. 2. Potential boost for cryptocurrencies. With no digital dollar in sight, could decentralized cryptocurrencies like Bitcoin and stablecoins fill the gap? Some analysts believe this move could drive more people toward crypto alternatives, especially stablecoins like USDT and USDC. 3. The global digital currency race continues. Other nations aren't waiting. China's digital yuan is already in circulation, and the EU is actively developing a digital euro. Could the US risk falling behind in the financial technology race? While the Fed has slammed the brakes on a digital dollar, this doesn't mean the idea is dead forever. Here's what could happen next. 1. A future administration or Fed chair could revive the discussion, possibly after Powell's term ends in 2026. 2. Private companies and banks may develop their own digital payment solutions, making a Fed-backed CBDC less necessary. If international competition intensifies, the US may be forced to reconsider its stance to maintain economic influence. So what do you think? Should the US launch a digital dollar, or is this the right move to protect privacy and financial stability? Drop your thoughts in the comments below. That's it for today's deep dive into the Federal Reserve's stance on digital currency. If you enjoyed this analysis, don't forget to like, subscribe, and hit the notification bell for more insights on global finance and technology. Thanks for watching, and we'll see you in the next one.